I think the whole outsourcing is going to take on some transformational change over the next 3 to 5 years. I think custodians have been very good at insourcing certain functions and certain components of people's operations and back office. But I think you're starting to see a trend now because of the cost pressures on the back office, where outsourcing is going to be ever more prevalent. Also you've got things like the Accenture APTP just started up, where SocGen just recently announced that they're outsourcing all of their back office. I could imagine very easily tier ones and tier twos taking a very similar route, because the reality of the situation is, particularly in the corporates and markets at the moment, volume is not coming back. It's getting shrinking and shrinking. Margins continue to put pressure on costs, and the cost block that underpins, particularly in the securities industry, is going to fundamentally change. It's causing lots of cost, which can't be bared anymore. So I think outsourcing is going to be a lot more prevalent over the next 3 to 5 years. I'm not so sure the custodians can react very well to that. I think you might see a couple of, even infrastructure providers, ICSDs are looking at that space. I think you've got, independent companies looking at the space. It just depends how how effective they are in putting a very good service together. The whole secret obviously of outsourcing is you can remain very agnostic, and a lot of outsourcing that's been done to date has been it's been somewhat agnostic but very proprietary around the specific deals. So the deals that custodians have usually done, whilst they've outsourced certain components of their back offices, it's interesting to see that maybe they haven't done that in a purely agnostic manner, meaning that they basically insourcing a function from a particular organisation, but it's very proprietary to that organisation. It doesn't give them a lot of leverage and scale from that. European sub-custody, I think, is going to look very different. I think there will definitely be some more consolidation. I think there will be not as much consolidation as the big players would like you to believe, because I think, where they've tried to get ahead of regulatory change over the last sort of 3-5 years, what they've done is, because they've got sort of oil tankers of systems to change and it requires lots of time and investment to make changes. I think the interesting thing is that they have tried to interpret what clients want without necessarily speaking to clients. And certainly what I see when I go and speak to clients at the moment is that a lot of the big players are coming in with highly credible people, great presentations, but they're not actually asking what the client wants. So they've interpreted what they want. They're building these sausage factory type of approach. And I don't think that's resonating particularly well with with the market. I think it still needs elements of flexibility. So I think there'll be further consolidation for sure. I also think that the services that people buy in today are going to fundamentally change. And I would certainly like to see the risk reward a little bit more balanced. So I think we're going to see a lot more advisory type services. I think we're going to be pricing for risk in much more than we have done before. I think pricing of core assets under custody and all the services around it have been priced to the floor, and I think we're going to definitely see some changes. So, risk reward I think is going to change. I think there'll be less providers, but I think in strong markets there will still be lots of providers, and there'll be a healthy competition for service. And I think the other thing that's very key in terms of the future is how adept custodians are in integrating in their investment banks. So I think full integration with the investment bank, a good product palette that's fully integrated, I think will be the way forward.